Yeah, I've started recording. So related parties are individuals or organizations that might have or expected to have an undue influence on the company that's been audited. So the related party can be an individual, it can be an organization. So far as you're having an influence on the firm that's being audited, then it's a related party. And also note that related party transaction is a material transaction between the client company and a related party of the company. So ISA 550, this standard, deals with the auditor's responsibility in respect of related party transactions. What is the auditor supposed to do when it comes to related party transaction? This standard outline what the auditor should do, how the auditor should go about related parties and related party transactions. One thing you should know is that it can be difficult to gain audit evidence about related party transactions. The reason being that these parties are people or firms who have influence, who have control over the firm that is being audited. Okay, so usually transactions between them, most of the time, is not at fair value. These related parties can have favors here and there. Okay, with the firm being audited. So the management of the firm being audited can put in steps or effort to conceal any transaction between these related parties. So sometimes, or let me say most times, it becomes difficult for auditors to even gain evidence about these related parties. So it's a high risk area. Related parties are high risk areas. When the auditor is assessing their risks of material misstatement and all that, when they're assessing inherent risks, they have to consider related party transactions as one. How does the standard defines related party? The definition I gave you in the previous slide is sort of a summarized one. So according to ISA 550, this is how they define related party. A person or an entity that has control or significant influence directly or indirectly through one or more intermediaries over the reporting entity. Can you give me an example of one? A person or an entity that has control or significant influence. Your parent company has a significant control over you, right? Or another entity over which the reporting entity has control over. And this is also a subsidiary. An entity that the reporting entity has control over is a subsidiary. Okay. Or another entity that is under common control with the reporting entity through having common controlling ownership or owners who are close family members or common key management. So this is how here can be associated. This is how ISA 550 defines related parties. So we may want to take note of it. Why is related party important? Why is it important? Why is it important? Why are we saying that it's a high risk area? Why? Know that according to IAS 24, related parties is the responsibility of the client's management to record and disclose all material related party transactions, the nature of related party relationships. You are required by the standard, you are required by law to disclose all your related party relationships and then your related third party transactions. You are required by ISA 24 to disclose all of these. This is because these transactions may be carried out on a more favorable terms than similar transactions. Since the persons involved or the organizations involved have control over the firm that is being audited. Therefore, disclosing related party transaction will help users of the financial statement to decide for themselves whether these transactions might have resulted in any manipulation of the financial, right? So you are required by law to disclose. Notwithstanding, management may be ignorant of this requirement or they may just be biased. And this can result in increased risk of fraud or increased risk of misstatement. So it means that as an auditor, when you receive the financial statement from the client, and then the notes to the account and go through to see if they have disclosed any related parties and then related party transactions. Knowing that management is supposed to disclose. When you receive the financials and you don't see any disclosure in relation to related party transaction as an auditor, what will you do? Knowing that is a requirement, what do you have to do? What will you do? Friends.
Madam, you go and call from them why it's not in the financial statement, even though it's supposed to be there.
You have to inquire. What if they tell you that, oh, there is no related party or related party transaction? What will you do? Will you just take it like that? Knowing that it's a high risk area, will you just take that explanation like that? You inquire and they tell you that, oh, there was no related party transaction. What will you do? Will you just take it? For inquiry, yes, is key. You will inquire. What next? What next? No, this standard, somebody is asking, Madam, is it IAS 24? What we are learning here is ISA 550, but it's related to IAS 24, related party disclosure. Martin, are you okay? Is that sorry? Have you learned IAS 24 already in financial
No,
reporting?
madam.
Hey, I'm not trying then. Why haven't you learned it? Related party disclosure. Which standards have you learned so far? Final year.
IAS one.
We've learned it too.
Hey,
Hello?
did you learn it last semester? 24.
No.
Yes, we did it last semester.
Sure, they will say no, they won't carry those. Okay. Did I hear you say IAS one? Is it a new one? Which IAS one are you learning? Hello.
Madam,
People are telling me that you are learning IAS one. Did I hear that?
We did last. One last time.
Hello.
Hello, madam.
Did I hear you say IAS one?
Please.
Are you learning IFRS 18 or IAS 1? Are you learning the new standard that is replacing IAS 1? Or you mean IAS 1?
Madam, we mean
final year.
IAS 1.
So in final year, you are still learning IAS 1. Myself, no,
Yes,
no, madam, it's revision.
revision. Oh, okay. What about IFRS 18, the new standard that has been released to replace IAS 1? Have you started learning it?
yeah, we had a webinar on it.
Yes, we had a webinar on it, but
The one by ICA, which was delivered by Prof. KO.
yes, madam, yes.
There come lecture no.
Yeah.
Okay. Noted. And it's a mobile battery meal.
Madam, don't worry. Yeah,
The last lecture, which me IFRS 81. Okay. All right. So I hope you know that this IFRS 18 will affect a lot of standards. A lot of standards will have to be revised. Hello. Will you let's come back to our ISA 550, okay? All right, so please, I meant IS 24 related party disclosures. I understand you learned it last semester, so please go and revise your notes. But what you need here in auditing is that you are supposed to disclose the disclosure requirement of IS 24. You are supposed to disclose all related parties and then related party transactions during the year. You are supposed to disclose all of them. Because of that, the auditor, when they receive the financial, they want to find out if indeed you disclose them. If you didn't disclose, definitely they will have to inquire why. And whatever response you give them should be reasonable. Otherwise, they will just dig further to see if they can identify anything. All right. So I've already made it clear to you that these related parties are exposed to greater risks. There might be normal transaction in many businesses, all right, but then there's high risk of misstatement because of the nature of the parties involved, because of their close nature, because of the control that they have on the firm. There's a high risk of misstatement of these transaction. And do you know why the auditor will be interested? Because there is a high risk of misstatement in as far as those transactions are concerned, it's going to lead to a misstatement in the entire financial statement. So when that happens, then the financial statement might not be given a true and fair view of the firm. That's why the auditor is so interested in this. You want to ensure that indeed the financial statement is given a true and fair view. So related party transaction may not be under normal market terms or at fair value. It's because the parties might get an extra discount, they might get favors, some favors. On the other hand, the parties may even be paying more. And what will lead to that? Maybe as a result of profit transfer arrangement here and there that they don't want to make it clear. Is that fine? So whenever you see related parties, you should be concerned. I don't know if I told you this before. There was an accountant of an institute, and that accountant was giving loan to the institute that he was, the accountant of. He was giving loan to them. So what do you think will be the interest on the loan? You just give loan, and then later on, I think the auditor realized that the institute is paying so much money to the accountant, and the accountant, when he was called upon, he said, "Oh, I gave loan to the institute." So what were the terms and conditions on Nkwan? So you can just imagine, this is a typical example of related party. Is that okay? We don't know the terms and conditions here and there. We just see you at the firm paying money to you, and you tell us that it was a loan. So as an auditor, what do you have to do? Find out the terms and conditions of the loan, find out the loan amount, what's the interest, is it at fair value, is it at arm's length? So these are the questions that you have to ask. It's a typical example of what related parties, and this is an unusual transaction. Their institute, it's an educational institute, and then you are giving loan to that institute, right? So it's an unusual transaction. All right, so you ask yourself, are management honest in disclosing related parties and related party transactions? If it could be that yes, they've disclosed some in the financial, but are they honest? Is that or professional skepticism? So you'll be asking yourself all these questions. Just don't ask the questions, so you have to get answers to the questions that you are asking. You should get answers to it. So an audit cannot be expected to detect all material related party transactions. In as much as you ask yourself all these questions, you try to probe here and there. You're not likely to get answers to all of them. So the rate that undisclosed related party transaction will not be detected by the auditor is very high when related party transactions have taken place without charge. Sometimes it will take place, you don't see anything like that in the box without charge, free of charge, actually. And you didn't see the trace of it in the box. When related parties are not self-evident to the auditors, sometimes it can be in the book, but it's not self-evident. You might not see it. And when transactions are with a party that the auditor may not reasonably be expected to know as a related party. Sometimes they'll have a transaction with a party with somebody that you wouldn't know that the person is a related party. You have no idea. Unassuming party, person or an individual. So unassuming you wouldn't even know. And when active steps have been taken by management to conceal any related party transactions, what will you do? And when the corporate structure is so complex that you might not identify a related party. Okay. What then is the objective of the auditor when it comes to related parties? He is to obtain an understanding of related party relationships and transactions and obtain sufficient appropriate audit evidence about whether these related parties relationships and transactions have been appropriately identified, accounted for, and disclosed in the financial. This is the objective of the auditor when it comes to the standard ISA 550. So how will the auditor understand related party relationship? How will you understand when you are getting to know the organization, the initial stages of the auditing, even at the planning stage? You have to watch out for related party relationship, right? Sorry, at the planning stage, you have to watch out for these. At the initial stage of the audit, where you are trying to know and understand the firm, understanding their internal control, their procedures here and there over there, watch out for related parties and all that. So when you are trying to know the organization, ask them, so who are your related parties? It's a question that you have to ask them. Who are your related parties? Who are your related parties? Ask them. Who are your related parties? They are supposed to disclose all their related parties to you, and you are supposed to document them. Then ask, were there any related party transactions during the year under review? If yes, let them tell you all the related party transactions. Actually, organizations are supposed to have laid down procedures to track their related party transaction. So find out from there if they have any of that. They have that laid down procedure that they use to track their related party transactions. If they have, they should let you know, and they should share with you all the related party transactions that occur during the year and the review. So, assessment and identification of risks. What is the auditor supposed to do? What are the procedures that are supposed to help the auditor to identify related parties? What are those procedures? Audit team discussion of risk shall include specific consideration of the susceptibility of financial statement to material misstatement through what related party transactions. For your information, related party is a high risk area. So when you are assessing your risk of material misstatement, related party should be one of them. Consider related party as a high risk area. So devote much attention and time and everything to what. Is that okay? So during your team discussion, it should come up that hey, related parties are high risk area. So you should always watch out for what related parties. So as a result of that, the auditor will inquire of management to identify all related parties, including changes from prior period. So after they told you all their related party for those year, you ask them, have there been any changes from prior period? So you take their response and then you just take whatever they tell you. You have to go through the working papers of last year audit working paper. It could be that you were the auditor or someone else or a different team or a different audit firm, but you just need the audit working papers. Go through to see the list of the related parties and compare it to what they are giving you this year. You will be able to determine whether there's been changes or not. Is that fine? And you also have to determine the nature of relationship that exists between these related parties. So what relationship there exists? Is it a parent-subsidiary relationship? Is the related party your parent? Is the related party a subsidiary? Is the related party an associate? Is the related party a director of a parent? The related party a director of a subsidiary? Is the related party the wife of the director of whatever? The related party the son or a daughter of the director or manager? Those things. So we know that related parties not just the a firm or directors of the firm. No, the relatives of the directors, relatives of management, they are all related party. Wife, children, brother, sister, all those, they are all related parties. Is that okay? So it means that as I say, you have a lot of work to do. You have a lot of work to do. So you have to determine the nature of relationship that exists between the entity and its related parties. When you are auditing a firm that has a lot of firms within its groups, all the firms within the group are related parties. And the directors, management, and their relatives are all what related parties to the firm that you are auditing. So you can just imagine the work. Is that fine?
Yes, madam.
All right. And you also have to inquire from management whether any transaction occurred between the parties, and if so, what transaction. They're supposed to disclose all those transactions that occurred. You're also supposed to obtain an understanding of the internal controls in operation over identification, accounting for, and disclosure of related party transactions. Ask them, do they have any internal controls for identification of related party, accounting for, and disclosure of related party? Is there any laid down internal controls? If they don't have, then it means that the control risks will be high, right? So you take note of that. And authorization, approval of significant related party transactions. Is there any controls over that? Who authorize related parties? Who authorize significant transactions as far as related parties are concerned? Ask them if they have anything like that, any laid down internal controls over it. Authorization and approval of significant related party transactions and arrangement with related parties outside the normal course of the business. So if whatever the transaction is outside the normal course of the business, maybe the business produces sachet and bottled water, but you realize that this firm is giving loan to some people. Giving of the loan is what? Outside the normal course of the business. So if there is any transaction outside the normal course of the business, what is the authorization procedure? Who approves what? At what meeting and all that? Find out if they have anything like that, if they have any internal controls like that in operation. And you should always maintain alert for evidence of related party transactions when obtaining your other audit evidence. In particular, when scrutinizing bank and legal confirmations and minutes of meetings, especially minutes of board meetings, minutes of management meetings, that's where these related party transactions are approved. So you really have to maintain alert for any evidence of related party transactions over there. And also, if significant transactions outside the normal course of the business are discovered, inquire of management the nature of these transactions and whether the persons involved are related parties. The probability that transaction outside the normal course of the business, the probability that they are related parties are very high. Anytime you come across anything like that, ask them. So, who are these people? Are they related parties? That's the question you should ask. But when immediately you see that, go back to the related parties, go and check through the list. It could be that the transaction was with an individual. So go to the related party, look at the companies, look at the persons, and find out if the name is related to any of them. Look at these politicians. Anytime they are registering businesses here and there, they register it in the name of their relatives here and there, and then they will be using such businesses to get contracts from government, and all these are related parties. That's why we are saying that the relatives of these firms here and there, they are all what? Related parties. Somebody has raised their hand. You have a question for me? You have a question for me? Somebody raised their hand. Okay. Maybe it was a mistake. All right. And then you are supposed to share information obtained about related parties with the other team members. Okay, maybe during your audits, I've told you that the components, okay, will be shared among the team members. You know this from last semester, right? Anytime you're auditing a firm, the components, the items on the financial statement, we call them components like revenue, PP, expenses, blah blah blah. They will be shared among the team members. So maybe when you were auditing cash and bank, and you came across some transactions here and there which are related parties, then you have to inform the other parties of the audit team, right? Inform your other team members that, hey, this is what I found. So watch out. As you audit, watch out for any related parties. And they might also come across these related parties. You also have to inquire of management and director as to whether transactions have taken place with related parties that are required to be disclosed in relation to IAS 24. Find out from them. Sometimes, yes, they are aware, but they do not disclose it. It might be an oversight. That's why you have to give them the benefit of the doubt. Okay. You also have to review prior working papers for names, as I already told you, for names of these related parties and all that, and compare it to this year. So when you go through the working papers and you find out names that are not in this year's list, find out from them why. You found this name in last year's list. Why is it not here? Have they stopped doing business with this person? Why is this person no more a related party? Is it that they forgot to tell you the name or what? Find out. You also have to review minutes of meetings of shareholders, directors, management, and all that. This will help you. I told you that your usually related party transactions are approved at that level. So as you go through the minutes of these groups, you are likely to come across what these related party transactions. You also have to review accounting records for larger unusual transactions or balances in a particular a transaction recognized at a near end of the financial period. So any large unusual transaction you should be interested in. Find out who the person or the party that the firm transacted with. Find out who the person is. And check your list, the related party list, to see if the person is a related party, or check to see if that person is related to any of your related parties that have been disclosed. Is that okay? All right. You also have to review confirmation of loans receivable and payable and confirmation from bank. Is that okay? Usually, one typical example of these related party transaction is loans. The organization giving loans to these related parties, or vice versa, or the related party giving loans to the firm. And I've told you that when the firm transacted with these related party, it might not be at what? Market value. It might not be at fair value. It might not be at arm's length transaction. That is the issue with related party transactions. And also review investment transactions, for example, purchase or sale of interest in a joint venture or any other entity. Be interested, it might be what involved in a related party. And inquire as to the names of all pensions and other trusts established for the benefit of employees and the names of their management and trustees. A related party might be managing the pensions of the firm. So be interested in. I hope you know what happened to SNET in recent time, the news on SNET. Let's extend that in the near future, there will be no money to pay pensioners. Can you imagine? So if the company goes unchecked, this will happen. And for you should know that SNET has an auditor who audits them every other year. So why haven't the auditors seen this all the time? That's our country, Ghana. I told you it's not easy to practice well as an accountant or auditor. It's not easy at all. Temptation is just too much. It's just too much. Somebody is doing their thing, and then they would want to conceal it, and they would want to involve you here and there. If you don't compromise, then they say, hey, if you're here or you're fine, why is the person difficult? And all that. It's so unfortunate. So unfortunate. So you have to inquire as to the affiliation of directors and officers with other entities. That is very crucial. So ask the directors of the company that you are auditing, what's their affiliation? Is there any other company that they are directors to? Okay. And so you have to ask them, knowing their surnames and all that, it will help you to identify their wives, their children, if they are involved in what, any transactions and all that, their siblings. You also have to review the register of interest in shares to determine the names of principal shareholders. See if any of those principal shareholders are what, a related party that they are having transaction with. And inquire of other auditors currently involved in the audit or predecessor auditors as to their knowledge of additional related parties. You just don't end there. So ask the previous team that audited the firm if they have any knowledge of related parties of the firm beyond what has been documented. Do they have any idea, any knowledge of related parties that might not be disclosed? Find out from them. If a different auditor audited this firm last year, you can inquire of them. Remember, they are your brothers, right? You also have to review the entity's tax returns. Return made under statutes or other information supplied to regulatory agencies for evidence of existence of related parties. You can get some evidence over there too. Review of invoices and correspondence from lawyers for indication of the existence of any related party transactions. So if risks relating to related parties and their transactions are identified, they should be treated as significant risks in accordance with ISA 315. Also, due to close connection between these related parties and possible fraud, the auditor may also consider the overlap of what ISA 240 as well. I want to believe you learned all of these standards last semester. So here, the audit procedures to identify related parties have been summarized here. So you can use this for your studies. So after you have identified, after using these procedures to identify related parties and related party transaction, what do you do? What next? As opposed to respond to that. We've told you that any risks with regards to this related party should be considered as what? High risks. But identifying these risks of material misstatement, which is definitely high risk, what do? You're supposed to respond to the risks. So as part of ISA 330, requirement that the auditor should respond to assessed risks. The auditor should design and perform further audit procedures to obtain what sufficient and appropriate audit evidence about the assessed risk of material misstatement. This has not changed. The same thing you learned last semester. But specifically, how does the auditor respond to the risk that he has identified? We've given you, the standard has actually given you scenarios, right? Everything you see here is from the standard ISA 550. Everything is from, maybe it has been summarized a little, but everything is coming from the standard for your information. This on how they'll treat it. Okay, so the first situation, when the auditor suspects the existence of related parties not disclosed by management, what should the auditor do? This is the action that should be taken by the auditor according to the standard. You have to determine whether the information does confirm the existence of related parties. This is your suspicion. So you have to determine whether the information available confirm your suspicion, right? What information is available? Everything you are auditing, the entire financial statement and the financial record, all the evidence you are gathering, find out if it confirms your what? Your suspicion. That's what the standard is saying. And if you identify related parties not disclosed by management through your procedures, you identify related parties that was not initially what disclosed by management, what should you do? You're supposed to tell the rest of your audit team members, hey, this is what I found, so watch out. Is that okay? You also have to request management to identify all transactions with the identified party. Hey, management, I realize that this person is your related party. Kindly furnish me with every information, every transaction that's what occurred between you and this party during the year and the review. He also has to inquire as to why the company's controls failed to identify this related party. Remember, this company is supposed to have internal controls, okay, for these related parties. So why did their controls fail to identify the related party? That's the continuation. And you are also supposed to perform substantive audit procedures relating to this related party transaction. How exactly? You have to make inquiries of third parties presumed to have knowledge, such as legal counsel. You also have to conduct an analysis, okay, of accounting records for transactions with related parties. You can use computer-assisted audit techniques. So whatever software that the company is using, whatever accounting software that they are using, use it to search for the name of this related party. Using the software will be easy. Just search for the name to see if they have other transactions with the firm, and verify terms and conditions of any transaction that this party has with the firm. Scrutinize the contract to see if it was done at fair value. You have to reconsider the risks of further related parties and being disclosed, and the fact that they are not being disclosed. Remember, related party, you are supposed to consider it as your risk assessment, assessing your inherent risk and your control risks. So knowing that they didn't disclose some of them, it can lead you to increasing the inherent risks, and then control risks, increasing whatever values you assign to inherent and then the control risk. In determining your overall audit risks, it can affect it. You have to go back and revise your overall audit risks by maybe increasing whatever values you assign for your inherent and then control, and that should tell you that your detection rate should be minimized as much as possible in order to reduce the overall audit risks, right? I hope you know that it's only the detection rate that can be manipulated. The inherent and control, you came to make it in the organization, so you can't do anything about it. The only thing you can do to help reduce the audit risk is reduce your detection risk. Knowing that related parties have not been disclosed here and there, then it means that your inherent and control risks are high. So your detection risks should be reduced as much as possible to affect the entire audit risk. And if non-disclosure appears intentional through interaction with them, and you happen to realize that it was intentional to not disclose these related parties, what will you do then? This can lead to fraud or even manipulation of the entire financial statement here and there. So you have to evaluate the implication of this on the overall financial statement, right? If it was really intentional, then it means that at another time you have a problem. They should affect the overall financial statement. And that's for when the auditor identify related party which has not been disclosed by management. What if the auditor identifies related party transaction that's outside the normal course of the business? What should the auditor do? You are supposed to inspect contracts. Okay, the contract or the agreement, inspect it, evaluate it to see whether the business rationale suggests a fraudulent purpose. Is it overly complex? Does it have unusual terms of trade? Does it lack logical business purpose? You have to assess it. Are the terms reasonable? Are the terms too favorable? Just find out. So the terms of the transaction, is it consistent with management's explanation? So when you see something like that, just interrogate them, find out from management. They will definitely say something. You compare it to the terms of the engagement. Is it consistent, or management is saying something different and then the terms is also different? So the transaction, have it been accounted for and properly disclosed? This transaction that's outside the normal course of the business is a part of the transactions that were identified, that were disclosed in the financial, is a part, or this is different? So all these are questions that you ask yourself. Somebody has raised their hand again.
Madam, please. I would like to know, in what situations will related party lead to fraud?
Oh, from your assessment, you'll find out, especially if it was intentional. What is the definition of fraud? One key word for fraud is what? It being intentional, right? When you intentionally do one or two things just to gain an advantage, right? For your personal benefit. So if it's intentional, then it's likely to be fraud. It's actually fraud. So that is one thing that you would note. And then, as I was telling you, going back to the unusual transaction, interrogate management. The explanation that they gave you, compare it to the terms of the contract. Does it match? Does it tally? And look at the business rationale. I mean, when you evaluate the contract or the terms of agreement, is it rational? Okay. Is it logical? So these are the questions if the answer is no, 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 then there is a fraud somewhere. It's fraudulent. So just go back to the explanations and then the things you learned and the ISA 240 and you just apply it here. Please, are you okay?
Yes, madam.
If there is no other question, then we'll continue. So we're talking about so outside the normal course of the business, I think we've discussed that one. So when management has asserted in the financial statement that related parties were conducted at an arm's length. So here they've disclosed the parties, then they've disclosed the transaction, and they've also indicated in the financial statement that all the related party transaction was conducted at fair value. That's the meaning of the arm's length. What do you have to do? So you have to obtain sufficient appropriate evidence that this is true by looking at the terms of the contract and assessing the price, the credit term, the contingency, specific charges to see if this is an at arm's length or this at fair value. So you are supposed to assess this as an auditor. So after doing all this, there is something else we also call written representation. This is where the management of the firm that you are auditing, they put it in writing or they write a letter to you, the auditor, stating that indeed they have disclosed all their related parties and all their related party transaction, and that all their related party transaction was done in an arm's length. This written representation, they put it in writing and they'll give it to you, the auditor, and know that this is what an audit evidence. This is from the management of the firm that you are auditing, telling you themselves, putting it in writing and signing that, hey, we disclose all our related parties, we disclose all our related party transactions. They were all done at an arm's length. That's related party. That's written representations from management. So all of these is what evidence. In fact, if they don't give it, you have to request for it. You have to request for the written representation. Tell them to put it in writing for you and you keep it. I remember I was once involved in an audit. We requested for written representation. We asked them to put it in writing for us, and then the guy just didn't know what to write. He said, "So what should I write?" So in the end, my team leader had to, virtually sort of write it for him, tell him what to write, blah 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 blah, and all that. At an author, you need your written representation evidence for you, so you just need it. So if he doesn't know what to write, you can guide them to write. You just need to put it on your file that this is what the client said. You make them sign. Is that okay? So conclusion. So if the auditor is unable to obtain sufficient appropriate audit evidence concerning these related parties and related party transaction, he can modify his opinion. You just don't go ahead and modify it before you get to this point, and you should have communicated with those charged with governance. You just then go ahead and modify your audit reports. Okay, when you are not happy with disclosure of related parties and their transaction, you first have to communicate with those charged with governance in line with what ISA 260. Remember, these board of directors, they are mostly those the related parties, not standing. You're supposed to communicate with them. But if you don't get any meaningful results, then you can modify your opinion. But before you modify your opinion, you have to sit down with the management, let them know that this is what you intend to do. You don't supply all the materials or the information you want. This is what you intend to do. But at the end of the day, if you realize that these related parties, their transaction has been misstated and here and there, you think it can lead to modification of your audit opinion, why not? It's allowed. So by modification, you can give an adverse opinion, you can give a qualified opinion or disclosure of opinion, depending on what the evidence you've gathered. So the auditor must communicate all significant matters arising during the audit in connection to these related parties to those charged with governance. That one is key. In line with IC 265, communicating deficiencies to those charged with governance. Uti Yabua, you have another question? Mr. Yabua, go ahead. You have a question.
With the concern with the disclosure, is there a format to it, or you just write that you transacted with a related party?
IAS 24 disclosure requirement. IAS 24 disclosure requirement is there. I understand you did it last semester, so just refer to it. Disclosure requirement IAS 24. Any other question? Mr. Otiabwa, yes.
Yeah.
Yes, madam. Good. Any other question? These things, they are related, though. ISAs and the IASs, they are related. Any other question, friends? Otherwise, we are done. We are done with related parties. How many minutes did we use? Almost an hour. We move on to using the work of an internal auditor. Did we do that one last week? Using the work of internal auditor. Did we do it last week? Friends? Using the work of an internal auditor. Or we did rely on the work of an expert.
Yes.
So as the auditor relies on the work of an expert, they can also rely on the work of an internal auditor. But under what circumstance will the auditor rely on the work of the internal auditor? Do they just rely on the work of an internal auditor? No. So what will make them rely on the work of an internal auditor? That's our next topic. You don't have any question for me. Reliance on the work of the internal auditor, ISA 610. ISA 610. So what's the difference between internal auditor and the external auditor? Am I muted or something?